At least $6 billion worth of Bitcoin has been sold by large traders since October 2023. This is the largest selling spree by these market players since 2021. The number of addresses holding 10 or more Bitcoin has been steadily declining since October 2023, dropping by 5,000 addresses. These are sizable addresses, investors who currently have over $600,000 in Bitcoin, so not small casual retail investors. Investors trading this size have likely been in the market longer and may have more experience than investors with a smaller capital invested in the space. But is there any truth to this? Historically, these larger holders have a decent track record. They sold during market peaks in 2021 and 2018 and accumulated during bear market bottoms in 2019 and 2022. In 2021, for example, they began offloading their Bitcoin as the price surged past $20,000, all the way through the big distribution and major peak of April 2021. Same. In 2017, they started selling when Bitcoin was nearing its all-time high of around $20,000 at the end of November. 2 weeks later, Bitcoin put in a major top and entered an extended bear market, crashing by 82% over the course of a year. In addition to selling during market peaks, these large holders have historically accumulated Bitcoin during bear market bottoms, taking advantage of lower prices to build their positions. In 2019, as Bitcoin traded in the $3,000 to $4,000 range at the bottom of the bear market, they were building massive positions. This accumulation phase proved very profitable when Bitcoin eventually reached new highs. A similar story in 2022, the number of addresses holding 10 or more Bitcoins rose by 10,000 as the price traded in the $16,000 to $30,000 range. Now, they have far from a perfect track record. For example, they bought heavily in late 2019 before Bitcoin dropped by an impressive 50% over the course of the next year. Nobody has a crystal ball. But as traders, it's important to be mindful of what others are doing. Today, these larger investors are selling. But to understand the situation more fully, we need to look at the recent price trends on Bitcoin. One simple yet very useful trend indicator is the 150-day moving average. When Bitcoin crosses this moving average, it typically indicates a bull market. During strong uptrends, Bitcoin stays above the 150-day moving average very consistently. As trend followers, you want to respect the trend until the technical structure changes. When Bitcoin breaks below its 150-day moving average, it's a sign that the trend is weakening and that traders can start looking the other way. This is what happened in November of 2021, in May of 2021, in March of 2020, and in September of 2019. Now, like any indicator, there's going to be false signals, which is what happened in August of 2023, where Bitcoin broke below the 150-day moving average and immediately came back above it. Or like here in 2020, where Bitcoin broke out above its 150-day moving average and then came back down below it as the COVID pandemic unfolded. Currently, the 150-day moving average stands at around $60,000, which is around 10 to 15% below current levels. This indicates Bitcoin remains in a strong uptrend today, despite the continued selling from large holders that we've seen since October of 2023. This could be stemming from the new ETF flows that have been extremely correlated with the price of Bitcoin. As new ETF flows have come in, Bitcoin's price has risen, compensating for the selling that we're seeing from actual on-chain Bitcoin addresses. We know that most of these inflows are coming from retail investors. Unfortunately, retail investors don't have the greatest track record. They often sell in panic, at bottoms at a loss, and buy in euphoria, at tops when in profit. In fact, today, close to 100% of Bitcoin addresses are currently in profit. Often this happens at peaks. However, such profit levels can remain for extended periods. This has certainly happened in the past. For example, in October of 2020, Bitcoin was at $12,000, and almost 100% of addresses were in profit. Bitcoin's price quintupled from that point on over the next few months. In December of 2016, Bitcoin's price was under $1,000, and 100% of supply was also in profit. Bitcoin's price went up 20-fold from that level over the course of the next year. This is why it's incredibly important to respect the trend when trading Bitcoin. So how do you trade the trend? On top of the 150-day moving average, we can add this simple trend line on Bitcoin that highlights where traders have stepped in to buy Bitcoin previously. As long as Bitcoin remains above this trend line, it's in a technical uptrend. If Bitcoin begins to break below this trend line, that would be an ominous signal for it. If you're looking to trade Bitcoin, Capital.com is a fantastic, user-friendly platform for you to do that. This is your chance to get started.